Good morning and welcome to the VSA Morning Miner. It's Friday. I'm Ollie O'Donnell and I'm joined by Paul Rankin. Paul, how are you today?
I'm well, thank you. And a nice, bright, sunny day, too.
Yep, it is. It's felt a lot lighter this week. Feels like the start of spring. What is out in the mining space?
We thought we'd start off here with our Shanghai Mining Club member and Brazil gold producer listed on the TSX, Cerrado Gold. Said on Wednesday they expect to deliver production of about 70,000 ounces per year by the first quarter of 2023. And they're going to push their production capacity up to about 90,000 ounces a year by late that year. Though they plan to do that by taking essentially a two-stream scenario, which we also note is something that our client Caracal Gold is pursuing in Kenya, and that is to use a CIL plant for the higher grade material, but then in Cerrado's case to also develop two different heap leach operations as well for their Argentina and Brazil operations. This is intended essentially to both diversify the sources of both feed and gold output, but also stabilize the means to deliver to production targets. And as a result, then they should be able to further grow the business there at Cerrado. So wishing them good luck on that.
Yeah, we're quite keen on this sort of development strategy. And I guess this story is perhaps one that is relatively new and hasn't really got out there yet. So the valuation is fairly undemanding. I think they're capped at about $80 million. And with the kind of growth that you've just talked about, it looks like some significant potential. The recent share price performance, though, is probably broadly in line with most of the other junior gold developers and producers, in that it's come off a little over the last couple of months, but is perhaps bottoming out as the seniors start to move higher with the gold price.
Mm-hmm. Yes.
What else is out there, Paul?
We had full year results, production results released by Norilsk Nickel, which is the world's largest palladium and nickel producer. Yesterday, they reported a 15% year-on-year increase in revenue to just shy of $18 billion, whereas their EBITDA increased by 37% year-on-year to $10.5 billion. They've making significant amounts of capex spend as well during this period, 57% up on various operations, up to $2.8 billion. They did declare a net profit, though, very nice jump year on year of gain of 92% to just shy of $7 million US. And they're looking at a situation where they see continued strength in the marketplace for the platinum group metals, although they did say, too, that they had a decrease in cash flow of 34% to 4.4 million, and that's partly due to the fact of having to pay back that big fine and debt they owed the Russian government for that spill they had up in the north of Russia a couple years ago now.
Yeah, well, they've obviously been benefiting from strong nickel prices there, so not hugely surprising. The earnings have been very strong. But speaking of environmental damages, or rather the opposite of that, Wheaton have put out their ESG report today.
Yes,
I think
yes.
Paul, that's of interest.
Yes, Wheaton Precious Metals, dual listed now, royalty firm, also in London as well as in North America. They filed their climate policy and their goals statement report, and they have committed to a net zero emissions target for their operations by 2050. And the whole point is to be able to show with transparency formalized policies and initiatives because their ESG ratings as far as investment are concerned should improve in that regard such that those firms which are taking on more of a climate or an impact sort of goals in institutional investment would hopefully make them more investable to that wider range of investors.
Yeah, it's quite interesting for a royalty company which isn't, they're not an operator and they don't necessarily have an active role in the operations. So how they can have a meaningful impact on their existing portfolio is interesting. I haven't seen the reports, so I don't know how they're doing that, but that would be my question. I can see how you do it for future investments. You can put in criteria and make sure that all your future investments meet those categories, but how do you manage that for an existing portfolio?
I guess the same way that current institutional investors in the equity of various mining companies, and that's via engagements with managements and so forth in order to see whether or not those managements are essentially get the idea that they need to improve their emissions exposure as well as the issues around social and governance in their places of operation, which may otherwise impact shareholder value. In the case of a royalty firm, then, if they didn't feel satisfied that management was up to speed, I suppose they would be tempted then to sell off that royalty to someone else.
Yes, although not quite as easy as selling shares.
Correct.
Okay, I think that's probably enough. We'll call it a day there, and we'll be back next week. Thanks, Paul.
Yes, you've got Andrew up until Thursday. I'm on holiday.
Yes, of course. All right, we'll speak to you next week then.
Very good.
Good break.
Thanks.
Cheers. Bye.